How you hold it, it's up to you. Yeah, you need to find the best way, but I wouldn't hold it with a bank. I would hold it at a private institution, private vault, or I would also put some in Dirty Men Safe, right? One of our affiliates. And if you want to find out more about Dirty Men Safe, there's a link below in the description. And of course, I'm still trying to back to war. Well, before we go and look what's going on in the world, what the markets have done overnight, and how I think, unfortunately, we're going to be paying for this. WTI crude today got up to 115.78. Right now it's at 100. I see here that they're talking about G7 to discuss joint release of emergency oil reserves. So is that going to help short term as usual? Is the fact that unfortunately you and I and the general public, our children, grandchildren, and their children for that matter, are going to be left to foot the bill for this war. It's not just the price of oil spiking over $100 that's going to be costing us in the short term. No, it's the cost of all the treasure that's going to be wasted through the war, all the debt that's going to be lumbered upon you, the general public, because we still have a system of debt and financing that is based on central banking, right? And the national debt. We're going to be lumbered with that through inflation, right? And that's going to continue to pay for this conflict. And the longer it goes, the worse it's going to get. And so I'm going to recommend a must-read book or pamphlet, if you want to call it today. And before we move further, yes, I know it's going to be harder and harder for young people, for those who are not in the top 0.1% or top 1%. Yeah, that's always the way it is. But there is a way to try to protect yourself financially, and I think that's the only way. And it's not just against war, but, well, war is very inflationary, of course, and they're going to continue to inflate things. The debt is going to continue to grow. And there's only one way to protect your savings, and that's through gold and silver, physical gold and silver. How you hold it, it's up to you. Yeah, you need to find the best way, but I wouldn't hold it with a bank. I would hold it at a private institution, private vault, or I would also put some in Dirty Men Safe, right? One of our affiliates. And if you want to find out more about Dirty Men Safe, there's a link below in the description. And of course, I'm still trying to protect my savings via acquiring physical gold and silver, and I'm not going to stop.
Wars are rarely paid for upfront. Instead of raising taxes immediately, governments often finance military campaigns through borrowing and expanding national debt. This approach shifts the cost of conflict into the future, leaving citizens to absorb the burden through inflation and higher taxes over time. The global financial system, built around central banking and government debt, allows countries to fund enormous spending through newly created credit. While this strategy enables governments to mobilize quickly, it also risks weakening currencies and raising long-term inflation. As debts accumulate, the true price of war becomes clearer. Not only destroyed infrastructure, but also decades of financial obligations.
Back to war. Well, before we go and look what's going on in the world, what the markets have done overnight, and how I think, unfortunately, we're going to be paying for this, I want to recommend this book because it's a book that tells you who the people who are going to really profit and how we get shortchanged because of war. And it's War is a Racket by Smedley Butler. the anti-war classic by America's most decorated soldier. Yes. So what does it say here? I'm not going to read the whole thing. Yeah, you might be able to find a free PDF. You might want to buy the book, but it says, unique among the high-ranking military officers of the U.S. and the world, I do not know of any other high-ranking military officer of the U.S. or the world who has spoken or written such most important truths and facts about the nature and causes of war. General Butler wrote these in simple and direct language that everyone can understand. His honesty, care for society, humanity, and justice for all, and profound insights are self-evident in his writing. Moreover, it is even much more relevant now than when it was written in 1935. War is a Racket is the title of two works, a speech and a booklet, by retired United States Marine Corps Major General and two-time Medal of Honor recipient Smedley D. Butler. In them, Butler frankly discusses from his experience as a career military officer how business interests commercially benefit, including war profiteering from warfare. Yeah. The old saying goes that all wars are bankers' wars, right? So nothing changes. So highly recommend this. So now back to the markets, which of course are moving a lot in the short term. In the long term, as I said, unfortunately, the situation is not going to improve. I think the U.S. is racking up $1 billion in costs every day from this war, and it's probably going to increase. They're thinking of boots on the ground, right? And before I continue, I published a video yesterday where I interviewed Eric Young from Hong Kong, and he gave his three best case scenarios. And one of them, which I hear a lot of people saying, is if this war continues to drag on and things get worse, which I think they are right now, the best thing for President Trump to do is to declare victory and call it quits, right? That's the best case scenario. But, they're talking about boots on the ground, so I don't know. But be as it may, I think there's been trillions of dollars of damage to infrastructure, not just oil and gas infrastructure of the Gulf countries, but also U.S. military assets in the whole of the Middle East. This is huge. Trillions of dollars.
One of the most immediate economic effects of conflict in the Middle East is rising energy prices. Oil markets reacted quickly as traders began pricing in the possibility of disrupted supply routes and damaged infrastructure. At one point, both WTI and Brent crude surged above $115 per barrel before retreating slightly. Governments within the Group of Seven have even discussed releasing strategic reserves to stabilize markets. However, such measures typically provide only temporary relief. Energy prices influence transportation, manufacturing, and food production worldwide, meaning that sustained increases in oil costs can quickly translate into broader inflation across the global economy.
And yes, that means more debt, more crowding out of the private sector, yes, more destruction, more profits, of course, for some. Overnight, the big thing really people are going to talk about today is crude oil. They're going to focus on crude oil. They're going to say that the price of oil is going to cause inflation, which is complete utter nonsense, because you should know by now that only governments can create inflation, right? And how do they do that? Well, through their central banks and through borrowing, they create credit out of thin air, and they create currency out of thin air, and they crowd out the private sector, and they buy assets, they buy goods and services, and you get the currency once it's already devalued, right? That's the what's that called? I forgot now. The economist from the 1700s said that, you get the currency when it's devalued, and that's going to continue because wars are expensive, destructive, and we always end up paying for it. Here in the UK, I think up until recently, we're still paying for Napoleonic War debts. In the US, people are still paying for World War I and World War II debts. Yes, those debts have been inflated away. So that's another way, another reason why you should have gold and silver, because in the long term, you can bet the government, Congress, the central bank, Parliament, wherever you are, and I'm not slagging off just the United States because Europe has been a master at this. They're gonna rip you off, and the very wealthy who have the assets, well, they'll continue to be wealthy, right? And it's one of the reasons why I keep harping on about gold and silver, because if you have some, you might be able to protect your family somewhat from the scourge of war, right? And wars, really, the worst part of wars are after the war, when you really have to pay for it. So yeah, WTI crude today got up to 115.78. Right now it's at 100. I see here that they're talking about G7 to discuss joint release of emergency oil reserves. So is that going to help short term as usual?
Financial markets have been swinging dramatically as investors reassess risk. Equity markets saw steep losses, with major indices experiencing significant declines during overnight trading. At the same time, precious metals showed mixed behavior. Gold briefly pulled back before stabilizing near historically high levels, while silver demonstrated relative resilience. Analysts believe some of this volatility stems from short-term trading dynamics rather than long-term shifts in investor sentiment. During market stress, traders sometimes sell profitable assets like gold in order to cover losses elsewhere. As a result, temporary declines in precious metals can occur even during periods when economic uncertainty is increasing.
What about Brent crude? Well, Brent crude traded up to 116.28. Right now, it's at 104.58. What about gold and silver? Well, all I have to say about gold and silver is that you need to hold on to your gold and silver for dear life, because the markets are very volatile, and it's not people selling their physical gold and silver. Here's speculators selling the futures, right, to pay margin on their other holdings, which are getting hammered today, like the Dow futures, for example. Right now is down 700 points, but it's been down as much as 1,200 points. So it's all over the shop. It has rebounded since oil has come back down. The NASDAQ 100 future is down 1.5% as well, or 360 points. But it was down as much as 700 roughly, and the S&P as well, same thing. It's at down 88, and it's been down as much as 150 points, more than double what it's down now. What about gold and silver? Yes, they were sold off, gold and silver futures. Spot gold got down to 5,013. We're now around 5,100, down about 1.4%. So gold is down as much as the stock market. Silver is down actually just 1% at 83.60. So silver is doing relatively well. So the gold-silver ratio is actually dropping slightly. And the more important market, which very few people will look at, of course, because it's where the smart money is, right, is the government bond market. Well, the Treasury yield curve continues to go up. Yields continue to go up, which is a bad thing. Don't forget, The United States has 9 trillion, well, it's already started rolling over 9 trillion this year of old debt that they need to roll over. I think it's going to get harder and harder, not just because the cost of this war and the cost of all the destruction of its military infrastructure in the Middle East and its allies, but also because it's going to convince more and more countries, even allies, that it might not be a good idea to lend too much money to Uncle Sam, not just because it might come back to haunt them in that you're financing the institution that's coming after you, right? Well, you know, and it's reasonable to say that because President Trump talked about Greenland. That's an ally, right? So, but not just allies, but countries that are not aligned with the U.S., I'm sure they're going to think really hard about increasing their treasury holdings. So it's going to become harder and harder. The world is going to de-dollarize more and more. And countries like Japan and South Korea, they are very dependent on oil from the Middle East. Their stock markets have been hammered today. And I think they might have to sell a lot of their dollar reserves to cover the cost of oil going up so much.
Another development attracting attention is the steady rise in government bond yields. Yields on long-term U.S. Treasury debt have climbed as investors demand higher returns to hold government bonds. The U.S. 10-year Treasury note recently moved above 4%, reflecting concerns about rising debt levels and growing fiscal pressure. The United States alone must refinance trillions of dollars in existing debt over the coming years. Meanwhile, some countries may reconsider how much they rely on U.S. financial assets. As global alliances evolve and energy markets shift, discussions about de-dollarization and alternative financial systems are becoming increasingly common.
Ever since this war started, the 10-year yield has been going higher and higher. It was below 4%, and now we're at 4.20, up 5 basis points, and I think it's going to continue, unfortunately, for you, the taxpayer, for you who's not in the top 1%, right? I think it's going to get harder and harder. How do you cope with that? Well, I think the first most important thing is that you know what's happening. Don't buy into this mantra narrative that I hear now, that all of this is short-term pain for the long-term gain, right? Because, don't get fooled by that. Do what you need to do to help yourself, and don't listen to these people who start the wars, right? Don't listen to them. What about the 30-year yield? Well, that's approaching 5%. It got up to as high as 482 overnight. Right now it's at 480, so it's not going to get better. What will that mean for you, aside from having to pay more tax, having to pay the silent tax of inflation? The general public is going to pay in higher mortgage rates, because you can bet mortgage yields are going to go up even more than treasury yields. The Uncle Sam is going to crowd out the mortgage sector, and the same thing is going to happen here in the UK. We've got the UK government bond yields. They're up massively this morning. Actually, gilt prices are dropping sharply. The 5-year gilt yield is up 20 basis points. The 10-year is up 15. The 30-year is up 7, a little less. So yes, some people might say that recession was already here, and I agree. Recession has been, even in the US, the only reason GDP looked good last year was all the spending for AI data centers. We saw that the last GDP number was 1.4 or 1.5%. The only reason these GDPs in the UK, US, and elsewhere have been positive is because our nations are running huge budget deficits, and that's going to get worse. So some might argue that they're going to blame, of course, this war for the recession. And that's convenient, right? They always do that. And people never learn, of course. Hopefully, you're going to be above that and think for yourself and realize that they're not looking after your interest. They're looking after the interest of Wall Street, the bankers, the big corporations. They're going to make out like bandits. So yes, unfortunately, we're going to continue to pay for wars. Major General Butler says about wars, about the racket, right? He says it's the only one in which the profits are reckoned in dollars and the losses in lives. So there you go.
Looking ahead, the combination of geopolitical conflict, rising government debt, and volatile markets suggests that the global economy may face significant challenges. Economic growth in many developed nations has already been slowing, and some analysts believe a recession may be approaching. Government spending, including large investments in technology and infrastructure, has helped sustain economic activity, but these programs also contribute to expanding deficits. Historically, periods of rising debt and geopolitical instability have reshaped financial systems and investment strategies. For individuals and investors alike, understanding these dynamics is essential, as the long-term economic consequences of today's conflicts may extend far beyond the battlefield.